Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back, guys. It's been a couple of days since market. I'm gonna make this one quick, hopefully not longer than 10 minutes. Bitcoin. So simply this 30.5, 30.6 level, we tapped it again. Last video we kind of ranging here. Now I didn't expect to round trip this, but I do think that this was the end of it. I said that last week as well, but I think there's plenty of reason to believe that. I think the next move is gonna exit the range. I do think this, I still believe this is gonna go to the downside. This is kind of the moment in time where you have a range, and I do think that shorting the mid range is the move, potentially a little bit higher. 786 up here. Either this was it, and I do think that was it. This is just like a short squeeze, and then it's going to come down. I think price. This is the shitty thing about these ranges, but I think there's a setup here, and you'll stop on this setup right here. After tapping this, could just go above that, or you could wait for this price to come down here, break out. Okay. Then in terms of targets to the downside, we have the 21 low, which is different on different exchanges for Bitcoin. So this is questionable how much this level will do. Though on Coinbase itself, it had a pretty defined reaction here, and it kind of was resistance on the way back up. So I do expect some kind of reaction to the level here, but ultimately the target, if this is the high, this is the first move consolidation, I do think is going to sit here, and then a little bit of ranging, maybe a little bit of up, and then it has to normally it would come and retest the low down here. If that's kind of like the where I think that short term the market is going. If things get really bad, we could reach this orange zone this week. I don't think that's what's going to happen this week, but you never know, because we've had a lot of volatility coming into this move, and this has been ranging for quite some time now. So any expansion could prove fatal to the downside. If there's a reaction of this low, I don't exclude the idea of coming back up here to retest before further downside. So there might be a long play if we reclaim it. Just come up here, okay? Then, that being said, look at ETH. Switch to this one, which is the same. It's a copy. I don't know. I somehow ended up with a copy. I posted this ID on Twitter. The retest of this triangle here. I think this is going to come down, maybe consolidate a little bit on the box, on the blue box, and then come through it to eventually test the monthly level here. So that's the target on ETH BTC. We could have a little look on ETH USD. I think this has so we have, this is the old chart from weeks ago, with this being the resistance and this being the deviation. Go to the daily here. Same kind of story here. So Bitcoin has already trying to break the lows here. If ETH is going to level here, it makes a lot of sense that it's going to come down for this week and here, which is also the high of January 2018. Okay, so that's 1300 to 1400. if that kind of gets lost, it gets funky. You know, get to somewhere here, 800, 750. Gonna leave that as it is. The other thing that I want to point out is the dollar. The dollar's coming down. It's seeing quite a bit of a rejection. 6 hour here. This ultimately right now I do think has to do with the fact that the ECB has been signaling that there will be hiking from negative 0.5% to 0% sometime in December, and their bond buying program should stop. So that kind of gives this reaction off here. I don't think it's enough to like make full trend change. Ultimately, I think DXY may come back down to the 100 level and then continue upwards. You know, and after this kind of huge rally, it makes sense that we're going to see some kind of correction here. Draw a little bit of a fib here. These on here. Anywhere between like 99 to 101 seems very reasonable in terms of correction. If that makes sense. I mean, could the dollar turn around? Absolutely, but it just doesn't make a lot of sense. I think Europe is going to contract a little bit in terms of liquidity, but so far it doesn't seem that it will kind of outpace what the US is doing. And that's, see, the dollar, the euro reacting here, and we need to zoom out a little bit on this chart, but there's this wedge kind of structure that had this fake out, and then we had the diagonal up here. We kind of both broke. We broke both to the downside. Now it's just retesting it, right? Maybe this is going to come up and retest this diagonal as well. But ultimately, I do think this is lost and it's going to come down to the red line at 0.9, which is going to suck for Europe, honestly. I live in Europe, so you know, this is something I'm not necessarily a fan of. At the same time, you know, being in this market just means that you get, you know how to hedge yourself. So having dollars, you know, has been one of the best moves in the last 6 months, and also retain a lot of purchasing power in Europe. The other thing that we're seeing is the yields, the treasury auctions. They're seeing some bidding. If they come down, see, you know, it's not a lot, but usually this comes down when, you know, there's people bidding the auction, and that brings down yield. Okay, and that might have to do with people finally getting interested in bonds, and the risk off from equities into cash is actually also seeing some flow into bonds. And we take this chart, we can see we had a solid reaction here of bonds. If bonds start to sell off more, I don't know what the hell is going to happen, but that's probably going to be a good thing for gold. But I need to think on how that works, so I'll come back to that in the next video. There's a few moving pieces when it comes to the gold trade. Let's see. You know, and we can see right now gold is also kind of pushing, and I think it's related to the fact that with rates going down a little bit, so the auction getting bid, that means that the real rates are going low, you know, negative again, or, you know, go down again. So that kind of pushes gold up. This entire move here, in my opinion, was caused by real rates going positive or more positive than they were. making people who were looking for like low risk hedges to inflation leave gold into those options. And now it's turning around slightly, so we're seeing this correction here. I still believe that, you know, this here, 1875 to 1900, is kind of the resistance, and then comes down here, and eventually we're going to sell off here. But that's just, you know, purely from technical analysis perspective, and I'll try to make a case that also supports this with data next video. If that makes sense. We're seeing that oil is kind of, you know, is this a Livermore cylinder? I don't know. It broke out. It definitely looks like a widening wedge, and it kind of retested it. It's very likely, in my opinion, that this is going to set up for upside from here. It seems that Europe is not currently gonna be able to commit to an oil embargo agreement right now, but it seems to be on the table for the next couple of months, which I do think is going to push this higher. And I don't know if there's going to be any escalation in the war. It surely feels like we're going to see some escalation of the war in the next, you know, 1 to 2 months. Some kind of new level, as FOMOCAP said it. So keep an eye on, you know, these commodities. Natural gas, well, it's mooning. You know, it's almost making new highs. But, you know, the whole inflation story, when we look at the US, this is in US natural gas, is just simply not going to be in control, you know, and obviously there's other parts of the market that are seeing diminished PMI and stuff, which kind of shoot point to, you know, demand slowly diminishing, though these commodities are not really coming down that much. I don't know what's going to happen to wheat here. Looks like a retest. So I don't know. I think we need to keep an eye on this as we go. Equities look really bad. Still, like, I mean, yeah. So, you know, the story here remains the same. I think the 4,000 level has become a resistance. So see a little bit of a up still here, and then down here. Maybe this was the high. Come down into the 700 range, the 400 range. I'm not really sure how fast this will happen. Currently, it looks to be going pretty fast. And the other thing is that the fix is still, you know, around 30. So there's definitely no overextension in the market to the downside when it comes to equity. Yeah. Not yet. Keep an eye on that. Simply put, let's go to this again. Simply put, zoom out far enough. Say we cap it right here. Grab the weekly. Basically see that, you know, either when there's like giant panic, it goes above it. Any sustained sell-offs kind of try and stay below this level, and it can stay below this level for a long time and actually come down. You know, this is 2000, and then once the fix gets above this, usually that's the end of it. Problem with that is, you know, is this kind of, you know, your regular overextension, as you've seen, is kind of almost all in the same range, or do you get, as you know, kind of event like this or this one? And it could be that we get this one first, we come back down below it, and then this year or next year sometime we just get like the most insane push upwards. So I think that's kind of a, you know, simple conclusion to the market. Back to the hourly here. Summary, short mid of the range. I don't think, you know, I'm not saying I don't think that we come up here, but, you know, obviously getting up here is where I'm wrong. kind of intermediate target, but I do think it's going to flip to resistance. So I don't, I think it's going to come through it and then retest it and then come down lower. So first real target is here, second real target is here, and if we get any acceptance, after retesting or whatever, we're going to go down here, and I don't think that's going to happen this month, but maybe next month. And there's more downside in my opinion. Okay, I've been repeating myself 50 minutes in. I hope you guys enjoyed that. Do me a favor and consider going to primexpt.com using the link in the description below or in the watermark. Sign up with them. They have a great margin platform where you can do like cross leverage on a bunch of assets, from FX to equities to commodities like gold and obviously crypto. If you sign up with them, you use the promo code Bitcoin Jack, you'll get a deposit bonus, which is pretty cool. And it helps me out, it helps them out. So if you enjoy this content, consider it. And if not, it's fine. But they make these videos happen. So thank you, Prime, and catch you guys on the next one. Cheers.